Hi, I'm Dan Held, and today we're going to talk about Bitcoin's 2021 cycle and how this compares to the 2013 cycle. And before we begin, I want to give a shout out to my sponsor, Ledn. Ledn is the best place to lend out your Bitcoin and earn a yield, or you can borrow against it using your Bitcoin as collateral. I personally use the product to earn yield on my Bitcoin. I've been a customer of theirs for almost, I think, 6 to 8 months now. So really enjoy the product. Definitely recommend you check them out. Okay, now hopping over to the topic of this cycle versus the last cycle, or actually this cycle versus the 2013 cycle. So I've been around a long time in the crypto space. Been there for the 13, 17, and 2021 cycle. The 2013 cycle had something very particular, which was there was two bull runs in one cycle. In the beginning of 2013, we saw a run up, and then at the end of 2013, we saw a run up. And I feel very much like this is the same vibe. Okay, so let's dig into the details. I write this first. This is on the Held Report. This is my newsletter that comes out every Thursday. If you want to get this first on Thursdays, go ahead and hit the subscribe button. The subscribe button is down below. Not the YouTube subscribe button, but if you go into the description, there's a subscription link where you can go sign up for this. Okay, digging in. So history doesn't rhyme, it repeats itself. And with previous Bitcoin market cycles, we haven't really, we don't see everything perfectly correlate with the last one. But there are some similarities, and these similarities persist based on a couple different reasons. One is that during each bull run, Bitcoin has to overcome a series of mental thresholds, whether that be new or existing FUD, so fear about China, etc., or structural. So like exchange infrastructure issues plagued the space in 2013, 2017, and will likely be still an issue in this one. I work at Kraken, and we spend a ton of time thinking about uptime, but it's very difficult when you've got a ton of new folks logging onto the exchange, all wanting to trade at the same time. And, ultimately the price is just a representation of FOMO and fear. And Bitcoin, like any other asset in the world, is subject to this. And that's what we see manifested as the price. So the price of Bitcoin, this is something that I wrote about before on the price of Bitcoin. This is an article that I wrote in the Held Report where I talk about why the price of Bitcoin is entirely what matters and how that drives adoption in Bitcoin cycles. So first and foremost, what's a viral loop? So this viral loop terminology I think is really important to get. It's about it's about having continuous referrals for growth. So what that means is your existing customers tell other customers about the product, and then those customers tell other customers about the product. So most of us heard about Bitcoin in 2013 and 2017 when friends and family were talking about the rapid price increase. So it's through this viral loop where they buy it, price goes up, then you hear about it from them or from others. And that's how this loop creates new adoption cycles. The price is the signal to folks that Bitcoin is interesting, solves a problem for them, and that others are recognizing it as a new money. If Bitcoin's price had stayed at 100,000, 10,000, $100, $1,000, none of us would be here. There's volatility, but we keep seeing higher lows that create a long-term trend upwards. So Satoshi had built in this viral loop into Bitcoin. So this is a quote from Satoshi before Bitcoin was worth a penny. As the number of users grows, the value per coin increases. It has the potential for a positive feedback loop. As users increase, the value goes up, which could attract more users to take advantage of the increasing value. I think this is just really brilliant how he was able to see that Bitcoin's adoption could be entirely driven by speculative bubbles. And when we look at this chart, which is the inflation rate. So the orange line is the number of newly minted coins. And let me pull a better chart for this. Orange line is the number of newly minted coins. And I'll zoom out a little bit. There we go. Orange line is the inflation rate. So how many new coins are being issued compared to the all existing ones. And then we have the price, which is the gray line. And so we see these halving events, these dotted lines. These halving events are important because what we see is this dictating the Bitcoin's 4-year cycle of boom and bust. We see the earliest cycle, which is actually back in 2011. I wasn't there. And then we have 13, and then 13 we can see these two distinct peaks. And then we've got 2017, which has a singular peak. And right now we've seen our first peak, and what I think is going to happen is that we might see a second one. And I'll dig into the reasons why here in a minute. So when we look at Bitcoin cycle, it's this viral loop. As the price increases, people become more aware of it. And in my article, The Price of Bitcoin, I dive in onto how there's a lot of different ways that this price cycle increases Bitcoin's value. And this isn't just the price of Bitcoin. This is, when we look at it user adoption wise, the growth of users coming into the space are driven by this price cycle. Funding, as we can see here, this chart's a little outdated. The funding increased, dramatically in 2018 after the 2017 cycle. And if we were to look at 2021, we'd see an even more monster green-blue bar here, which would probably be massively higher. So with Bitcoin's price rising, it not only drives more users, more funding, also drives more liquidity. So liquidity in terms of volume, so how much money is bought and sold or how many counterparties there are. What liquidity determines is basically how many participants can participate and how big they can be. And with the institutions coming in, now Bitcoin can actually reach the kind of final arena of being a world reserve currency where it needs billions of dollars of liquidity on a daily basis in terms of volume being traded, in terms of depth of order book, how many buyers and sellers are there right now. So Bitcoin, the price is incredibly important for that. And I think a lot of people discount Bitcoin's price where they're like, oh, there's a lot of utility outside of price. The price is the utility. And that's really important to understand. So the 2013 cycle. So here's what I'm talking about. In the beginning of the 2013 cycle in April, we saw a price run up from around $13 at the beginning of the year to $260. And then a little crash, recovery, and then a very, very agonizing, and I'll pull this up in a bigger chart, a very agonizing sort of sideways chop. And I think that we're in that right now, where we're seeing like we might have hit bottom already, and we've seen like a little bit of a recovery, or we could be, this played out a lot faster. This was in the initial month here. So this is a couple months later. So we're kind of in the same area. We're in July, August area. Just left July. Now we're in August. And, we're starting to see the price start to run up, to go up a little bit, kind of recovering to where it used to be. And then later in November is when things got crazy again. And that's when the price went all the way to 12. So it went from like $100 to $1,200. I mean, that's pretty wild. Like, I think a lot of people who have just came around in 2017 or 2021, which are most people, they don't remember this moment. And I was there. It was really interesting to see that, the 2013 bull run was the one that put Bitcoin on the map. It brought Bitcoin into the mainstream visibility. And, what was kind of funny, like back then, like none of us knew like the halving and content around Bitcoin. I mean, there were no YouTube channels, no podcasts. CoinDesk didn't even exist at the beginning of the year. So it was a huge period of transition of Bitcoin becoming like this niche thing to like becoming a really popular mainstream or heard about in the mainstream. Also, what was really interesting is that at the time, us OGs felt that we might get in trouble. I mean, Bitcoin was kind of in a gray area legally, and a lot of us felt like we might get arrested or have our doors kicked in just because we owned it. And of course, if you're running like an exchange or something at that time, you had a lot of risk on the KYC AML side. But it was kind of like the Wild West. And, operationally, just to kind of set the context, 2013, Coinbase wasn't an exchange back then. Coinbase sourced coins from Bitstamp. They were a brokerage. So that, Coinbase only created GDAX years later. And what was really funny is I found an article here where that talks about how Coinbase had, in February 2013, they had $1 million in volume for the entire month. Coinbase does around $4 billion in volume a day now, just to give you an idea of how much more liquidity there is in the market. In April, payment processors, BitInstant and Mt. Gox experienced processing delays too. They basically, they couldn't handle the incoming volume. These are the articles, by the way. They'll be, if you go subscribe to the newsletter, you can go find these. But essentially, here's the $1 million in 1 month. And then we had, inside the Bitcoin bubble, a Q&A with Bitstamp's stressed out CEO. So Bitcoin at that time was kind of really shaky foundation. There wasn't a ton of like exchange infrastructure in place. Mt. Gox represented like 90% of trading volume. You also had like other things like RoboCoin and BitcoinX, those were the first Bitcoin ATMs. That was pretty cool. Baidu allowed clients to pay for their website security with Bitcoin. So this was kind of like putting Bitcoin on the map. On the downside too, we had a lot of regulatory uncertainty and a lot of enforcement action. So like Silk Road got shut down, but Silk Road and Satoshi Dice represented a huge portion of all the transactions. And so we were worried at the time, what if that was the only demand for Bitcoin was to do these illegal things? And what we found out is that Bitcoin's value prop was actually store of value, that people wanted to store value in it. That's the primary use case. People forget also that Mt. Gox had some of their bank accounts seized because they didn't register as a money transmitter with FinCEN. And then, in October, when the FBI seized the 26,000 BTC from Silk Road, they also arrested the founder. And so, that was a really big kind of crazy deal for folks back then. We weren't sure if things were going to bounce back. And then, in traditional fashion, China FUD killed the bull run. So basically the market peaked out around the time when the People's Bank of China prohibited Chinese financial institutions from using Bitcoins. The China FUD never dies. And so that was kind of like the peak. If we look at the price, basically one day after basically that was the top. And the China FUD is what killed that cycle. And same with 17 and 2021. We saw that at the beginning of the 2021 cycle, a little bit of that fear coming in. And then people also forget that in March, the Bitcoin blockchain actually had a protocol issue. And the core developers essentially had to do a hard fork and fix a bug that occurred. And so Bitcoin's price dropped like 23% that day. And so 2013 was kind of nuts. It was a bunch of really weird geeks kind of being thrust into the mainstream world. Regulators are scrambling out what to do with this thing, and the infrastructure and exchange technology was just getting in a place to barely be able to function for retail participants, but not institutional ones. And here's a picture from the January 2013 meetup in San Francisco that I went to. This was one of the biggest meetups in the world for Bitcoiners, and there was only about a dozen people that came. And it was in a former crack house called 20 Mission, which is like a hacker house, but it was a former crack house that they converted into a co-living space, kind of like a hippie co-working co-living space. And we even had a party when it hit $100, which 100 people went to, and that was big. To think that Bitcoin had become something so large was sort of unfathomable. That it would be this gigantic $1 trillion currency, that we would have all this exchange infrastructure, and there'd be 100 million plus people who own Bitcoin. That was what we hoped would happen, but we were we had our expectations set low. But zooming out, that was just the beginning. There was the 2017 bull run, and now we're in the middle of the 2021 bull run. This era, though, is very different. There are 100 million Bitcoin hodlers. There's a massive amount of trading infrastructure in place that allow huge participants like billionaires to come in and buy $1 billion worth of Bitcoin. There's very, very certain regulatory structure. Now, I know there are some current debates going back and forth. Some of that stuff I think is very out of bounds of what the regulatory environment has been so far, which has been, companies try to operate pretty in line with the regulatory requirements. And I think with the squabbling going on in U.S. Congress, that's a lot of like weird politics of people trying to jam in something. But most of the regulatory environment seems to have stabilized-ish. Much more so than 2013, that's for sure. There's tons of institutions, banks, corporations, nation states, hedge funds, sovereign wealth funds, and insurance companies that all hold Bitcoin now. I mean, that is huge. Basically, Bitcoin has now been validated as an institutional store of value asset. And even some politicians are coming out and saying, like, we think Bitcoin is good for society, and they're running on like the Bitcoin platform. So how does 2021 play out price-wise? Well, we've gone from 8K right before the bull run to 64,000, back down to the 30,000s, and as of today in the 40,000s. What does this look like if we overlay it on top of the 2013 bull run? And that's where this is really, really cool, is when we zoom in on this, we see the overlay of the white line is the current cycle, and the blue line is the 2013 cycle. So as you can see, there's a lot of similarities. You have a bigger price run up, the price falls, you hit a low, goes sideways, and this sideways chop, I know it's grueling, right? Because you're like, are we in a bear market? Are we in a bull run? You don't know. And it's this sideways chop, and all the sellers who don't have strong conviction in Bitcoin, they're going to sell, which means it reduces the sell side pressure. Whenever demand starts to increase and push the price up, there'll be less sellers because they already sold in that sideways chop period. And the sellers that are left only want to sell at a very high price. So, if this all plays out, we've got another month or two of sideways chop. If that occurs, then there might be another surge later this year. Again, no one knows what's going to happen to the price. If I did, I'd be a trillionaire and I'd be at my yacht right now. I'm just speculating as to what if 2013 played out again in 2017. We're seeing a little bit of that glimmer here. TBD on if that happens. Now, there was a really cool thing put together by Ecoinometrics. So Ecoinometrics put together a really cool GIF. And so this GIF compares all of the drawdowns from from 2013 compared to now. And in the also the 2017 era. So you can kind of see, and you'll see in a second, it'll render the long, yep, there we go. That's the 2013 long cycle. Now I went ahead and took a screenshot because it's hard to kind of follow this GIF. And when we look at this, we're along this path. And so this is 2021 is the orange line. The green one is 2013. So, if this plays out similarly, which I'm not saying it will, and I have no idea if it will, if it does, that means we've got a few more months of sideways chop, and then late this year, things should get very, very interesting. So later in the winter, things should get really wild. Historically, it would be very rare that we would enter a bear market this quickly during a bull run. So I do think there's a lot more price appreciation to be had. Again, I have no idea if that's going to happen. I've bet almost my entire net worth on that happening. We'll see if that actually occurs or not. But I do think that there's a lot of reasons, macro and micro reasons. So macro wise, you have money printer go burr. Governments have printed more money ever than in human history. You've also got Bitcoin having super strong fundamentals. It's thrown off a lot of the FUD, the China FUD, like all the miners already got out of China. So China is not really a piece of FUD anymore. It got through the environmental FUD, or at least the surge in environmental FUD. And it's going to get through this regulatory quagmire right now going on in the US Congress. And once it sheds all this, there's not a lot of negative narratives that'll be headwinds for Bitcoin's price, and all the sellers who didn't have conviction in Bitcoin will have sold. So, we might see something similar like this happen again, but who knows what the future holds. As we've seen in the past, history doesn't repeat itself, it rhymes. But this is shaping up to be, I think, a pretty insane winter. If you enjoyed hearing me go through this, if you enjoyed my thoughts on Bitcoin, subscribe to my newsletter because you'll get this first on Thursdays. If not, give me a subscription on my YouTube channel. This helps me out a lot. It helps me spread the word about Bitcoin and everything I talk about. Hope you enjoyed. Cheers.